Greetings, everybody. This is Jeff Scott, and welcome to this week's top-down review. You'll see this on Sunday, November 14th, 2021, and I titled today, Will Inflation Be the Grinch? This steals the Christmas rally. For those who don't know me, I am independent. I am an unpaid volunteer, and I respond to questions, comments, whether it's on YouTube in the comment area, or if it's to my email address, hgsidoc@gmail.com. As always, this is for educational purposes only and should not be considered investment advice. I'm a doctor, not a broker. I am independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I just want to make sure you're aware that my next virtual stock club, free as everything, is Tuesday Eve, 7:30 p.m., which is this Tuesday. I am anticipating Dr. Keith Wade, although I think he may get pulled to a sporting event for one of his children, which I would always do before coming on a webinar. If he's unable to attend, I will hopefully show you some of his tools that I use, maybe convince him to give us an extra discount because he's not here, and invite him back in another time. The registration link is right here. I will copy this and put it below on YouTube in the comments. It'll also be in the email that comes out to everybody who gets my emails. And if you're wondering how you get my email, you go to the HGSI IO group email and become a member of that group, and you'll get notification every time I'm doing something, posting, etc. Not going to spend a whole lot of time today, but I've learned from a lot of different people. Ian Woodward used to say, Jeffrey, I'm not a guru. I'll teach you to be your own guru. And I think that was some of the best advice I ever got. This is Ian up here. Learn from smart people. Figure out what works for you and get good at it. And then wash, rinse, repeat. Wash, rinse, repeat. And be your own guru. And I think that's what each of us should strive to be. I own a lot of different software. Tradestation, Thinkorswim will be on every computer that you'll ever see me use, with indicators from John Person, Dr. K, and Sager's Q tools. I've been playing a lot more with wealth charts, and we'll probably show you some of that stuff at the stock club. I do most of my analysis using HGSI. It's one of these unique tools that allows you to do a combination technical and fundamental analysis. EdgeRater, you'll notice a lot of EdgeRater in my slides. I use that to automate certain things. And then what's under here is, even though I'll bring Dr. K on and I'll bring other people from time to time, I don't get paid. I don't ask them for a piece of what you buy. In fact, I ask that anything that they'd want to give me for introducing them to my folks is bigger discount for you. I make plenty of money in my day job and saved enough money from trading that I don't need to make money off of you. I'm an unpaid volunteer, and this is just education. Now, those that would like to get HGSI that don't have it, they actually have a free 30-day trial, and under investing strategies, you'll find lots of movies that I have done. Last week, if you find it, I included a video and a PDF of the vocabulary I use, which might be useful to you if you're a newbie. It's under the community where you could see the HGSI IO forum, and you can sign up for that to get copies of my emails when I send them to the forum. So where are we? Wow. What a week. You know, we started Monday morning and it was like, my God, the bull market is back. We're going to rally into the end of the year. By the end of the day, Monday, I was still up quite a bit, but I was up a lot less than I was at the start of the day. Tuesday, I had a relatively flat day. I was up, and then at the end of the day, gave back most of what I was up. And then Wednesday, I don't know about you all, but I had the worst day I've had in years. When I looked at the percentage down, and I'm leveraged, and when you're leveraged and the market moves a lot one way or the other, you feel it. Now, Thursday, I made back almost every penny I lost on Wednesday, and then I had a great day on Friday. So net, I'm up on the week, but what a crazy freaking week. I got a feeling we got more of them to come, folks. So where are we? We're at best, we're at stage 3 uncertainty. I think there is a lot of risk in this market, but the risk goes both ways. I mean, the markets like to climb a wall of worry. We've got inflation. We've got the Democrats and their second infrastructure bill. We have, whether that's pro or anti-inflation, I don't know. I'm not smart enough to know. How is that going to impact on our taxes? Is the SALT going away? How's the supply channel impacting the Christmas holiday for retail and home builders and everything else? So there's a lot to be worried about. And then you balance that with great seasonality. And despite all the negativity that you might see in the markets are right off all-time highs. So I think this is one of the toughest markets that I've ever been in. Now, I probably am not doing the right thing here because I should have raised a lot more cash. I've got a lot of options that expire in the money. I do a lot of call spreads, especially on some of these stocks that have really high volatility premiums, high extrinsic value. And so by doing a spread, I reduce some of my cost. So I have a number of them that, I'm a pig. I like to get the maximum out of that spread that I can. And even if the spread's already in the money, every day I get a little bit more return. So there's a balance between being a pig and being reasonable. So I sold some of them, gave up a few pennies selling them early, um, but I still have too much, and I want to probably close some more out early in the week. I think it is an uncertain time, but don't be so bearish because of all the negative things I mentioned, because we're in the best time of year for seasonality. So I think you got to be nimble, trade the market we get, and on Sunday morning or Friday night, Saturday night, after hours, all I can do is guess because, hey, I don't know what the market's going to be like at 9:30. And then the other crazy thing with this market is how the futures can go from negative to positive and make major moves in the last 10 minutes before the market opens. I think this is a risky market, but I think it's not just risk to the downside. So I'm going to be cautious. If I look at how Friday ended and we're looking at the major sectors, after you get below this arrowhead here, these are materials, energy, financials, and whatnot. And you could see, except for maybe REITs, which had a lot of red, it was a pretty strong day on Friday. I know I made a decent amount of change on Friday. I'm sure you did as well. Let's look at the major markets in Thinkorswim. I think that'll be this line. And let's open up, well, before we even go there, well, yeah, I'll show you better when I make him larger. The whining you hear is my dog, who I just gave 14 treats to, took him out to go to the bathroom, and he thinks he needs 14 more treats. So I'm holding my ground. I'm being firm, but we may hear some whining, which I apologize. So there's a couple of themes here. The themes that you're going to see, volume is actually looking here. The red skyscrapers, the bad days are higher volume. So the up days are lower and lower volume. I'm not sure how meaningful that is. Clearly I'd rather see the skyscrapers be green, not red. As I look at the E-minis here, S&P futures, I look at the Nasdaq futures, I look at the Dow futures, you're going to see that Wednesday, which I said was such a bad day for me, was a reversal day, and at least a PPS sell signal came in. So we had a short term to start with, sell signal. Then we had kind of an indecision day on Thursday and a really strong day closing right off or at the highs on Friday. So if you look at this, is this just like this here? Or is this the beginning of something worse? I mean, as long as I'm above that 17-day here, I have to be bullish with all the caveats that I told you a few minutes ago. Nasdaq, exact same story, above the 17. The 17's above the 50, above the 200. For whatever reason, I don't have color volume on the Nasdaq. If I look at the Dow, let me make this equal to the others in time. The Dow, all of these had all-time highs. This one was hit, I guess, on Monday, Tuesday, Wednesday, on Monday. Wednesday, a reversal sign, traded down to the 17 and reversed. Again, how can I be bearish with this chart? I'm bearish because I'm in a sell signal, short term, and would it shock me if we saw some more short-term weakness? No, but if I had to pick bear versus bull on this, I'd be bullish. Now, this one I love because, I'm going to talk about the signals that I use for trading and some of my favorite setups on Tuesday during my part of the virtual stock review and remind people of what is a kahuna and all the other crazy names that Ian taught us. But this is a breakout from a Darvis box. And we haven't retested. It wouldn't shock me if we retested this line. But again, a sell came in on Wednesday, recovery on Thursday and Friday. Bullish or bearish on the Russell? Well, this is the best looking one of the bunch. Bullish. The VIX. The VIX had a sell signal come in on Friday. So early in the week it ran up, failed at the 200 and came down. The VIX doesn't tell me anything to be concerned. This is the one that probably bothers me the most, and we'll look at the weekly charts in a second. But this is the dollar futures, and a fresh breakout above the 50 and the 17-day. Didn't do much on Friday after setting an all-time or a 3-month or so, or actually take that back, high of the year or longer on Friday. It gave some of it back, finishing with sort of, I guess Rob Hoffman would call that an IRB with with half the bar closing in the upper half of the bar or near 50-50. So that might be concerning because I know my stocks do better when the dollar is weak. Now, if we put up the weeklies just very quickly, and I'm not sure I'm going to break down and go look at each of them, but if I put up the weekly here, you could see on the weekly new highs across the board, Dow futures, Nasdaq future, S&P futures, Nasdaq future, Dow futures, Russell futures. And what I wanted to point out, and this is something that if you want a strong dollar, you're probably happy, but the dollar broke out above the 200, so this is a pretty strong move, and there's nothing above it. So if this thing wants to keep going, it can. I expected it to reverse there. I'm still thinking that's a possibility, but there has clearly been some dollar strength. Now, again, a lot of people ask me, do you actually do all this stuff every day? The answer is yes. And the next thing I like to do on my daily basis is to look at the expected moves. It's not extended moves, it's expected moves set support. So that was when spell check doesn't pick up a word, that's actually a real word, even though it's used differently than you wanted. So the thing about the expected moves, imagine you wanted to buy a straddle at the money. So if you buy a straddle at the money, you're expecting an outsized move. Now the market makers are the smart money and they're going to sell you that straddle. And the way that I calculate it when I look back in time, about 80% of the time, the market makers are going to break even or make money. Now the price of the straddle would be equal to the expected move, bullish or bearish. So for you to cover the cost of that straddle, you're going to have to trade above or below the green and the red lines. As long as you're in between, then if you're above the white line, then your long put is going to expire worthless, and your long call will be worth something. But since the put and the call were equal price, you're going to lose money. If you get outside the red or the green line, you've made up the cost of your premium, you're going to be in profit territory. But imagine how hard it is to make money on that at the money straddle. That's why market makers like to sell them. Now, the interesting thing is when you watch the markets and you watch the futures, and on a heavily traded stock, you can watch that as well. You can see often that the stock, it opens, well, the white line reflects the close of the prior week. And here's the E-mini trading down, did not get to the bottom of the range, closed right at the white line. And guess what? The market makers made all their money on this trade, lost very little on their short put position. Look at what happened at the Nasdaq. Traded right down to the red line, went below, and then you knew on Thursday when it traded up from that red line, it's probably going to reverse. That this here is going to turn out to be support, and then Thursday was a very strong day on the Nasdaq futures. You look at the Dow futures, never traded to the bottom. Market maker made money because it did not close above or below the green and the red. If I look at the Russell futures, traded right down to the bottom and the market reversed. So often when I watch the markets, they reverse either at the top or at the bottom. Now, I don't usually buy them to the next day where I close up within the range. But here is the Russell trading down to support and bouncing. The VIX did nothing on the week, traded just below the center line, and the dollar did break out above, which is how unusual, but it actually closed pretty close to the top of the green line. So this is the one trade where the market maker, whose total premium was the difference between the green and the white, ended up losing between the red and the green line very little. So that's how I use the expected moves, and they clearly told me to expect a reversal on Thursday, although I never in my right mind would have expected anything similar to what we saw. And then if I look at the major ETFs, and these are long-term channels, which I'll probably redraw soon, I think it's important to see the spider is back in it and probably in a more bullish position than last week. The diamonds came back down to the center, so a better looking for bulls than last week. Interestingly, the NASDAQ or the Qs failed at the line, and we'll see if we can get back in. And then the most bullish of all is the Russell. So let me pause this and see if I can get my dog to stop being a little brat. This is what happens when you spoil kids or dogs. I love my dog, but boy, is he spoiled. Notice he stopped whining because I threw him a treat. I like to always look at the same things. And again, I do this every day in the market. I don't make up a slide presentation, but if it takes me 10 minutes to go through everything in this PowerPoint, I'd be surprised. And it really gives me a sense every day of what to expect to happen in the market. So what do we know about this week? Both the 10-year and the 30-year rates turned up. Hard to see it here, trust me. Rising rates, you know what that means. It could be dangerous for tech. And I think what really threw tech on Wednesday and nailed my portfolio for one day at least was the fact that there was a really weak bond auction. And if the bond auction's weak, that means the interest rates go up, the prices go down, and interest rates go up are at risk for the stock market. Now, banks, regional banks, insurers seem to benefit from rising rates, and there are specific ETFs that are positioned to benefit from rising rates. Now, I was looking at, before I did this, an article written in 2007 talking about Milton Friedman and how you can beat with inflation and whether it can be done by fiscal or it has to be done by monetary policy. And Milton Friedman, who's been dead for many years, was a believer that it had to be controlled by monetary policy, and that the only thing you could do to blunt inflation is to really put the brakes on economic growth and demand. That means rising rates. It leads to higher employment and reducing GDP. Scary things. I really actually feel bad for those in power right now, because if this inflation is not transitory in the setting of still a lot of people have not gone back to work, how are you going to fix inflation? And you know, the answer is obvious. Rates are going to have to go higher. And the issue will be, to me, whether the markets discount that till it happens. and then they drop, or do they start dropping well in advance? I think rising rates will be the break on this market. Question is when. And then what do I know? I'm a cancer doctor, not an economist. If we look at AD lines, you look at both the 2000 and the 1000. The 2000 were off the highs, but still going straight up on both the white, which is the AD line, and green, which is the index. They had a little pullback at the end of this week compared to where they were last week, but still very bullish. But look at the large stocks, all-time highs on price and AD line. All-time highs on price and AD line. Not necessarily what I'd expect to see if the market was ready to roll over. If I look at the NYSE, you can see the AD line in white has rolled over, as well as has the ETFs. You can see up here the color codes. You got diamond skews, spiders, and Russell, but everything is just off their all-time highs. And no surprise, if rates go up, what happens to bonds? Bonds go down, and you can see the TLT dropped a little bit. Now, breadth, which was really aggressive and strong last week, eased off some. Your stocks above the 200, stocks above the 40, and I forgot to move this, but you could see last week we were sitting here on the 3-month new high, new low, and we came down some. So I basically said we remained strong, but eased off overbought. Daly McClellan, I had a zero line reject, which can be bullish. I don't see much of a signal here. I'm looking for extreme readings. No. Divergences, we've had divergences of price in the summation index and oscillator going back years. I thought we were going to work it off. We're getting closer, but nothing there. And the same thing on the weekly. I don't see a new signal, except you'd like to see with these new highs, you'd like to see the summation index breaking up above, and it hasn't. Where these have become really helpful to me have been calling the reversals when the markets pull back and when it goes higher. Right now, that's not an issue. Buckets. Now, last week I called out how the market was overbought and would pull back within a day or two. Why? Because when I looked at the buckets, I saw that 79% of the stocks in the S&P 1500 were trading above the midline of their Bollinger Bands, extremely bullish, but more concerning was 27% or so were trading above their upper Bollinger Band. If you spend 90% of the time within the Bollinger Bands and you start getting above or below, you're going to get a reversion to the mean. Here we are a week later. We're still very bullish with 70% of the stocks trading above the midline of their Bollinger Band. And but you can see the super extended stocks have eased off. Now, Q does this real time, gives you a 2 days look. It's been just a great addition to my tools. Now, Hindenburg omens, these will signal a potential large market sell-off. You haven't had one occur, a large sell-off that is without a Hindenburg going back since before World War II. It's classically seen on the NYSE. It sort of signifies the smart money selling to the dumb money. We are the dumb money, and the smart money is getting out. It was interesting. We actually fired one on Wednesday on the Nasdaq. I have no idea what that means because the classical Hindenburg omens on the NYSE and probably on the common stocks, not all the stocks. You can see the NYSE remains without a signal, and our new highs, green for both Nasdaq and NYSE, which means they're elevated, but they're well off their prior highs. Market tone remains mostly bullish. When I look at the week that was, yes, there is a trend from low ERG to higher ERG, but it's pretty darn compressed. ERG is rolling up EPS rank, relative strength rank, and group rank. You could see EPS rank mattered for a change. Maybe this has to do with earnings week. Relative strength did not matter. We saw some very powerful relative strength stocks sell off on missing earnings. It was relatively mixed. You can see my stocks were up a little bit. Here is the S&P 500. Here was our Keepers Index, more to follow on that. And the canaries are, I think they're somewhere down here. Here they're canaries. If we look at the IBD, here's a MarketSmith 250, the weekend review, the blue dot scan, the IBD 50. They're in yellow, scattered above and below the S&P 500. It was a mixed week. That's what I called it. Good if you own certain stocks, not if you don't. Sector strength is still strong, but we used to have a lot more greens, and we'll look at this in greater detail. Now, you'll see differences between EdgeRater and the Q Edge tool. It's simple. EdgeRater is looking at the S&P 500, and the Q Edge tool is looking at the 1500. Now, this is sort of a dashboard that tells me sector strength, industry strength, and stock strength. 1 month, 10 days, 5 days, 2 days, and 1 day. You could see we've certainly weakened some over the month from where we started on the positive sectors, industry groups, and stocks, but we're still no worse than a 50-50, and we're better than a 50-50 market. You can see last week this was in the 20s, and by Monday midday it was above 30. The buckets here, you could see sector-wise, on the 5 days we were only up on 3 sectors in the S&P 1500. Much better day, obviously, on Friday and Thursday. Now, if we look and rank the sectors, you could see materials, discretionary, and information technology were leading. On Sager's weekend update, he actually looked at acceleration, not which ones were the strongest. So I'm going to play around with that and see if I like that better. But this tells you where the strength was, and you can see that over the last month, these are the 4 top groups as well, if you include industrials. Energy goes in and out, but it's mostly out now where it was mostly in before. Now, I took the industry groups here. These are the stocks that came out of the top 7 or 8 industry groups, and these were the 2 that were the most attractive, and the one I really liked from the top down using Q was Lazy Boy. Now, this did not come up when I did my HGSI review, and probably because this isn't a high growth stock, but you have a stock that ran up, sold off, had a John Person buy signal on the weekly, 2 weeks up in a row, a bullish candle there on the backdrop, and breaking out of short-term resistance over here. I would have rather bought it a week ago if I had seen it, but this one looked interesting. Canaries in the coal mine, sort of the Fang extended. You could see them as defined up here. Again, I know Priceline's booking. I'm just too lazy to change my slide. There's actually a 10% sell-off over 5 days on the Canaries. So from all-time highs, pull back, doji on Friday. Doesn't necessarily look like the run is over, but convinced me to be long these going into this week. I just got to see what it does. Certainly hope so. It's interesting. Tesla sold off hard after it was a big winner, and Amazon came back to life. Keepers. Remember we did this in the stock club last month. What made me feel good on Wednesday, and I almost came out and did a video, but that's just not me. I don't do videos during the week very often, is the keepers pulled down to the 17-day and reversed. And if the index of my leadership stocks does not drop below the 17 and gets back above the 8-day exponential so quickly, I'm still bullish on this market. Again, I have my concerns, but I am expecting that this index of leaders to roll over before the market does. It hasn't rolled over yet. It's off its highs, but it pulled back and it bounced. News and earnings. So news, manufacturing on Mondays, retail sales, import prices, production, utilization, home builders, building permits, housing starts, and then Thursday we got some jobless claims and leading economic indicators and Fed manufacturing. I'd say a light to medium week. No Feds meetings, which is automatically becomes a high news. Still tons of earnings. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. This has been a difficult earnings season because even beats on earnings, beats on revenue, and raises have not always been working. A lot of stocks still to report. Some of the big cap tech is done. One of my holdings that I talk about that I've held from 35 to 280, 260, wherever it's at now, is C, and I'll have to decide what to do beforehand. It's kind of like a Southeast Asia Amazon. It was a gaming stock. I didn't even know it switched. I just couldn't understand why it did so well. But I'll have to make a decision whether that decision is to put some collars on it, take profits. Going into earnings, for example, Generac got pounded, but I had put a collar on it and sold half before earnings came out. So there are ways to protect without selling, but selling before earnings is never a bad thing. Market thoughts. The 5 week winning streak came to an end this week. Um, we saw declines across the board for the week. You saw as well fresh sell signals on each of the major indexes. If you look at the John Person sell, rising interest 6.2% year over year, largest since November 1990. Core up 4.6. Somehow the market seemed to shrug this off. I watched my stocks hit new highs on Monday, had the worst day of the year on Wednesday, thought my best day of the year on Thursday, and ended up the week up. What a frickin' crazy week. We have entered one of the best times for seasonality as we head into Thanksgiving and year end. The market resilience is impressive considering the impact of inflation, supply chain challenges, and looming rate increases. However, the markets do seem to like to climb a wall worry. I'm still too long right now with few hedges. Part of me wants to go all in expecting a nice year and rally. But as volatility increases and risk with the Fed tightening, I'm going to raise more cash and trade some additional return for safety. Now I'm up considerably over the markets. Um, how often are we going to see 25% returns on the S&P, 23 on the Nasdaq, 22 on the Russell in a single year? I've been doing this for some time. It doesn't happen very often. Just think about it. If the law of 72s is taught to us by Ian moons ago, if the S&P goes up 24.7% annually for 3 years in a row, you double your money. Hard to be in cash when you see these numbers. Again, Tuesday, November 16th, coming up. So really, a lot depends on whether Dr. Wade can join us or not. If he can't, and believe me, I played high school sports. My parents went to one game in 4 years, plus 2 years of middle school. I would never tell somebody not to go see his kids wrestling or basketball, whatever it is. So if he's unable to make it, you'll get me for more time, good or bad. My plan is to review the impulse indicators that we learned from Ian, plus the others that I use from other folks. I'm going to show you examples of stocks of why I use those and then apply them to current markets. So please come and join us. I record them if it comes out. They don't always come out because I'm using Zoom, not my usual way of doing things. And there's no button, sorry about that. So let me then go up here and there we go. All right, so let me close that for now. And let's look at Tradestation. Why? Because if you watched this last week, that was my best clue that this market was going to roll over. Here's the E-minis. We had a sell signal, both a Laguerre and a person come in. The Laguerre RSI signals come from Dr. K. The red dot here is MACD divergence. You're getting higher and higher highs. You haven't even barely broke positive on the MACD histogram. Blue means indecision. Green is still bullish. Everything on the bongos is green. Your high jump came down to 72, and your high jump maxed out here at 85. So didn't get to obvious rollover land, but you could see it's running up the channel. So we've rolled over here. As I said, it's still a sell signal short term, still long-term buy signals, both weekly and monthly. Hopefully it'll get up there quickly. If I look at the Dow, very much the same story with the MACD divergence. Here's what I want to look at was the Nasdaq. When we looked at it last week, the high jump was at 98.36, and I said it's going to come down because it just can't stay there. It's a sign of extension. The next day, it closed at 93.80 on the high jump, and then it came down from there. We don't have that problem anymore. It's down to 75. We're inside the envelopes, just we're in a sell signal. So How long before the market switch to a buy signal remains to be seen. And the thing that I will be watching is the dollar. And I think the dollar is telling me something. The dollar is telling me it's too extended. I've got MACD divergence on the daily and the weekly. Here's the MACD at this high. Here's the MACD here. So you haven't recaptured the high, yet you got a much higher price. Same thing on the weekly. Um, we're in rarefied air, and we're at 94. We were at on the high jump 100 on the 11th, and then what happened on the 12th? It came back some. So if I had to guess, markets go higher, you get buy signals next week, and the dollar comes down. But this is late Saturday. It's not Monday at 9:31. So what do I know? Now, I continue to look at the market, and it was very gratifying. I had dinner with Kathy and Kid tonight. Kathy is one of the folks that watches the videos, was our neighbor in Old Palm and fellow dog walker. And she said, oh, so 50, and she got it, that 50% of what is going to happen on Monday or Tuesday or Wednesday is the market. That's why I spend so much time talking about the frickin' market. The market is everything. So here's the S&P, nice run up. You can see the person sell signal that came in. On the cash market came in on Thursday. We closed up on Friday. Here's the weekly, not much damage done. We came off the high jump a bit. We're still extended. How long is this going to go up? I don't know. Do I think it's going to go up this week? I do. And look at this line here. I mean, I don't, let's put a quick trend line. I got to find on which of my monitors. Here it is. There's probably some kind of a long-term trend line like this, and we traded up to it this week. Week 4 gave up some, so there's probably a little upside left in the S&P. And again, seasonality is our friend now, not our enemy. So that's the S&P 500. Now I'm looking at the cash markets, the Dow Jones Industrial. I'm not going to spend much time here because we've looked at it enough. It hasn't given up the farm. I'm looking here for what's called a Phoenix. I don't see one. You'll learn about that if you come on Tuesday. If I look at the Russell 2000, just so beautiful how it broke out of its upper box. And it looks on the weekly that it did not test. It did not even come close to testing. So most bullish of them all, I think right now is the Russell. I love it. I mean, this thing went sideways forever. Do you think it's going to stay above it for 1 week? I don't think so. I think this thing leads the market higher until the dollar becomes a problem. And then if I look at the Nasdaq, again, we've looked at it before. Here's a Nasdaq composite, positive day on Friday. And I don't know how you can be bearish looking at this, except to say, you know, eventually the market's going to get to the point where it can't go any higher. Are we there right now? If I was a betting man, I'd say, no, I don't think we are there yet. So, I mean, you know, we're at, you know, it's probably not going to go much higher than this line, but it's not there yet. So is that another 20, 30 points, more points? My guess is we run up a little bit more. Am I a perma bull? Absolutely not. I told you I'm raising some cash because I'm a little concerned that we have this wall of worry that eventually is going to play out. What else can we look at? NASDAQ 100 does it look the same or different? That looks about the same. So this is the biggest stocks in the NASDAQ. So let's look at IBD 50. So to me, this is small cap growth, and it dropped hard on Wednesday, part of why my portfolio was down, at least on Wednesday, and it bounced Thursday and Friday. You know, you look at it on the weekly, look at this bottom, or this tail here. You can see it better when I do that, all the way down to here before it bounced. That's a pretty bullish candle, even though it's red. So I'm hoping to see this go higher. I can look at, that's not what I wanted. Okay. I can look at Fang. So Fang without Tesla doesn't look as bad as Fang with Tesla, but Fang dropped considerably this week. Again, rising rates could be perceived bad for big cap tech. But is it broken? No, it pulled back to the 17 and traded up. So look at this, how far down it went and reversed. I got to be more bullish than bearish across the board on these until it stops. Biotech's been tough. Biotech, you could see, is in a downtrend. I think biotech is in the be very careful zone. Somehow I got some LABU that's still profitable. And it's got to be which one has Novavax versus Moderna. But biotech is certainly not in its strong period of time. So watch it, but biotech's not where it's moving now. Semis have been super strong and they remain strong. They had a mixed week with the long-legged doji here, but setting an all-time high this week on a close. So, and on intraday. Hard to be bearish. That's all I can say. If I look at the dollar, as I mentioned before, the dollar has broken out some. And, for me, a growth stock investor, a super strong dollar is not what I really want to see. Small cap growth guy, it's at 96% on the high jump. So it's at a place I'd expect it to reverse. But boy, the dollar's been strong. The market's gone up despite that. So maybe I shouldn't worry about it. Gold, dollar strong. What's gold doing? Gold had a good day. Is this fear in the market? Is this a flight to safety? Is this concern about inflation? All the above. And this is a line that we drew weeks ago. You can see the dash line because it keeps keep the line going, and we broke above it this week. So I have a Royal Gold position that's doing pretty good. Silver pulling back down here. Failed at or has not broken through the 200. Has not really failed yet. What about gold miners? Have broken above, bullish looking chart. And then oil, if you want to see something that's been strong. Look at the weekly, pulled back 3 weeks in a row. I wonder if this isn't the week that oil makes another move. If you look at the earnings per share on the oil stocks, it's impressive. Plus, if you think about it, it's not like we're expanding supply. And if we do get back to work and back to normal, you would think that consumption will go up even with the electric cars. Now, if you're having a hard time in this market, if we look at ARKK, which is the preeminent, I guess in my mind, Cathie Wood fund, ETN, ETF, and you could see it's just struggling here. Look at the weekly. Look at how sideways this thing has been since March, kind of like the Russell. And despite the fact that she has a big Tesla position. So if it looks like that and she's got Tesla in this fund, can you imagine what the rest of the fund is doing? Not pretty. Now, if I hit 07 Industries, hit warehouse, you'll see I've got 174. Let's see 2-day up. 2-day ups, I got 60. How about 2-day down? Not many, 16, so that's a bullish from that perspective. Let's look at the top couple. We're at 43 minutes. Don't want this to go beyond an hour. Renewable energy is number one. I'm ranked sorting by 2-day force. Change index group. So Plug Power, I always consider this a junk stock. It's a hydrogen fueled, I believe, story. Okay. I remember when it did this, it got up to 78, it came back down to 24. It's moving again. The chart to me is bullish. I just don't trust this name. I've been in and out of it before. Enphase Energy, what a beautiful move here. Gap up on earnings, sideways, and it looks like it's running again. The solar stocks have been strong. I own a couple of them. I also have a pretty big position in TAN, of which I'll probably start taking some profits on. Fuel cell energy, another alternative energy play, breaking above the 200. You just look at least on fuel cell and plug, this picture is not a picture of a high quality stock performance, but maybe it'll change its spots with the Green New Deals. I also own DQ, which it looks kind of chipper here. Um, it's trading right below the 200 and the PSAR dots, so let it get above those. But you had a mobile breakout, new John person buy, a pocket pivot, and a kahuna this week. And I'm a sucker for earnings per share growth, and the earnings per share growth here in the 260 range, and it has a PE of 8. Something's got to give. I think it's held in place because it's a Chinese stock, and you always have the risk that they decide to go after this one. Charging company, Blink, um, is the one that comes to the top. You know, you had a run up, prolonged flag, if you can be in a flag for an entire year. And it looks like it's starting to break out now. I don't know who's going to win her here. I bought, let me see, open up my TD Ameritrade account and tell you which one I bought. I can't even remember. I got, just tells you that means I got to sell positions. I think it's EVGO. Let me see. I bought EVGO. I bought it on Monday morning. I saw some news that I like. So Blink, um, Pioneer Solar Power, Distribution Network, don't know this thing from Adam, and then Electric Power Equipment. I mean, if you look at the index, it's breaking out after a long sideways move. Generac is one that I still have some. It really did not behave on earnings, and it came back pretty hard. That's this bar here. Maybe it's putting in a bottom, will go higher. This is one that I'll keep rolling up and out. The position I have left is my primary position. I've been in it since $100 when I gave it to you all on one of these calls, and it's not broken. Um, and like I said, I took half of the position I had off prior to earnings. I just didn't want to take a chance. Semiconductor devices, semiconductors have been on fire. AMD continues to be great. I know Kathy bought some on Wednesday. I just thought that, or Tuesday and Wednesday have sold off. And I told her it was the best house in a bad neighborhood. Well, the neighborhood got better quickly and it still looks good. I have no problem owning AMD. I guess you have to be aware that its growth rate is slowing and its multiples pretty high. But still, this has been a leader and no one says it won't continue to be a leader. Micron starting to look chipper. Sold off, long flaggish pullback here, broke out above trend line, or at least, yeah, trend line resistance this week. Got that 200 above, which might be a little bit bothersome. Um, you know, technically, when I look at this, it looks like it is less negative than it was here, so maybe positive divergence occurring. Micron looks interesting, great earnings per share growth. This is one that's just very subjected to supply and demand on DRAM. Xilinx had a breakout in a good run. It's already gone, not something that I would be chasing here, at least not how I trade. In NVIDIA, I own some of this, pull back with the market. Looks like to be sitting at a good place. It did have a long-legged doji this week, so let's see if it can move further or is it going to rest a little longer. So there's a lot to like here. There's just not a lot to like right now. AVGO, it's already running. This is what I'm going to teach you to find right here. A mobile breakout from a squeeze, break above the 50-day moving average, and a kahuna. And that to me was the signal to look. This was the wrong program. The chandelier stop and a break above that would have been a buy. 2 days later, you had a person buy signal occur. You had big volume come in. This was the time to have bought this. I don't think it's the time to buy it right now. I'm going to show you how I find those. Qualcomm, it's already run. So finding stocks that are good setups might be the problem. Discretionary, oops, that's not the first one. Let's get to the first one, which is Farfetch. Bible gap up, I believe, on earnings. Could be the start of something interesting. 2 kahunas in a row. So you saw a kahuna the day before, just had a mobile breakout from a squeeze the day before. So somebody knew something. Um, I'd like to see it get above the 200 before I start chasing, but that was a powerful move. Why is it not a Bible gap up? I suspect because it's so far below the 200-day moving average. Netflix is one of the best stocks right now, and I'd rather buy it off the 50 with a pullback. And again, the same story back here. Mobile breakout from a squeeze, a new John Person buy signal, pocket pivots, a kahuna the next day, and a takeout of this chandelier stop. This was the buy day. You got alerted to it the day before. Again, I'm going to show you how I scan for those and what those things mean. Here, what do we got here? We got a mobile breakout. We got a new person buy and a kahuna. Higher risk to buy it up here than to buy it down here. But if I had to guess, it's going higher. Amazon. Ugh. I use it mostly to generate lots of margin and for portfolio margin. But this thing just, it's a sideways killer. And so you don't buy calls, you sell calls. And you sell puts way above and below the range. And basically, it generates portfolio margin for me. I have a protective put somewhere below the current price, and I sell stuff above and I sell stuff below. And I hope this breaks out someday, and maybe this is the week. Hope so. But my God, can we go sideways anymore? Etsy, nicer pattern. Okay. So here's where I got alerted to it. And I could have bought it right here, but this here is that chandelier stop, and I'm going to wait till I close above it. And, you know, I do the same thing over and over again. Etsy's had its run. It's too far gone for me. JD.com, they had their Singles Day this past week. They had a great week. Why Alibaba has supply channel they don't, I don't know. Breaking out. Earnings are this week, so that's taboo to buy. PDD, no. Wayfair, no. Too far down in the thing. Chewy, maybe, but not yet. Alibaba, I mean, it's probably a great time to buy it, just a bad time to buy it. I mean, you got so much overhead resistance, all these people, if only I can get my money back. Not to say that buying it now you won't be happy, just I think there's risk. Semiconductor manufacturers, Everson Technologies, don't know the story, but it went from 8 to 11, a nice move. All the signals of Bible gap up. Interesting, don't know anything about it. Ran a lot, probably wouldn't chase. Applied Materials, this is sort of one of the nicest of the group, but it's gone. In my opinion, you missed your chance. Lam Research, maybe a little bit better place to buy, but it's a $600 stock, as is ASML, which is an $800 stock. And then I get to the index. I want to find things I can buy. I found some, don't worry. Next group down is other financial services. So you got Marathon Digital, big run up, pull back, and a move. If you want to play Bitcoin, look at the earnings per share growth. This is a minor. This one looks good. I would have bought it. This is the time to buy it here, of course. Broken record, coulda, woulda, shoulda. It's doubled from there, but look at its earnings per share growth is all I'll say. Higher risk. I think Riot's a little bit easier to buy here. Base metals, copper firmed up, and you can see even with the rising dollar, a breakout here Thursday, and there you go. Mobile breakout from a squeeze, a new John Person buy, a pocket pivot, and a kahuna in a strong market. This looks very viable right here, a benefit, I suspect, of inflation. And Alcoa, it's got to get above a chandelier stop, but it too has really impressive fundamentals. Internet-based services, gotta love Shopify. Now the question is Shopify already too far gone? Probably. Where are you going to put your stop? It'll have to be somewhere halfway down this bar, and that's still way too far. So this thing broke out, had a massive day on Friday. If you own it, God bless you. If you don't own it, man, it's hard to buy it here. Probably goes higher. I love this company. But boy, it's hard to buy it after that move. It's just too far away from support. So to me, risk is too high. Trade desk, Bible gap up and kept on going. Again, for me, the risk is too high. I'm just looking for something that looks viable here, and I'm not seeing anything that I want to run out and buy on this group. Zscaler has been a great leader. So, broken record. Stock was in an uptrend, went into a sideways move, pulled back to the 50. Then right here, I've got a still below the chandelier stop. I had a mobile breakout from a squeeze. That triggers me to say, if it trades above this, I want to buy. And the next day it breaks out, the pocket pivot and a kahuna, and it takes a nice run. You know, does it go higher from here? Probably, but do I want to chase it here? No, it's too risky for me. PAGs, I know Dave Ghilardi loves it, it's not doing anything, and then we get to the index. Number 9, specialty pharma, Tilray. So the first 3 are all pot stocks. So I own some of this because I bought it cheap, and it's sort of a call that never expires until I sell it. It's not a call, it's stock, but it was cheap stock, on whether marijuana ever happens. So every time it pops up, it looks good in my portfolio because I have a lot. It's in a downtrend. It's been in a downtrend forever. The crazy thing on this stock is I remember when it got up to 300. Nutso. Someday they'll approve marijuana and it'll do great. Is it coming? I heard a Republican was putting something out in Congress. Same thing with Canopy Growth, Aurora Cannabis. Apple's is a innovator biotech company. Don't know much about it. Kronos is another tobacco and marijuana play. So if you like marijuana, well, I'm not going there. I think they're interesting, and maybe you'd want to have something in your portfolio in your long-term account. But short-term, they look like they're going to go somewhere. UZ, I like the chart. You know, again, it's that same pattern that you see in some of the junkier names. Got to get above its 200. Trades 2 million shares a day. Traded 11 million on Friday, so that's interesting by itself. Doesn't make any money, and the part that kind of worries me is this company's got a market cap of almost $1 billion, and it has total sales of less than 15 million. I just seems like a pretty crazy market cap. So if you know something, God bless you. I'm not putting my money there, although obviously a lot of people were buying it on Friday. I'm not sure if it's a meme name. GoPro is interesting here, changing their business model to subscription. Notice over the last couple of weeks a series of kahunas to the upside. Notice that right here you had a person buy mobile breakup from a squeeze and a kahuna. I think it's still buyable here, and this is one that I'm going to look at, and I won't chase it too far, but this one looks interesting. So that's the top 10 groups. I did put together a buy watch list, so let me show you that real quickly and see if there's, all I'm going to do is I'm going to go through the leaders list, not my buy watch list. There might be one I want to talk about, but let me see. So I got my buy watch list. Remember, it's still earnings season. I didn't check on these because I don't own them yet, and I'm not sitting here getting ready to buy them. So if we look at the industry groups, I mean, I love this stock, Nutrien, big run up, pulling back to the 50 here. So I want to see momentum. And I've got my chandelier stop here, which is $3 away. But my goodness, look at this earnings per share growth here. So I'm not buying it yet, but I'm interested in buying it, especially if it takes out a chandelier stop. It's a ways to go, but I'd rather have lower risk of failing. Zoom Info, it's probably too far. The time to buy was probably back in here, but I like this one as well. I had a mobile breakout from a squeeze and a pocket pivot. I have to do some work and see if I can get within a 5 or 6% stop on this one after it moved up already. Bunch of base metals. Hudbay Materials is an interesting company. It's got a wide range of different minerals. It's above the 200. This one looked interesting. Great earnings per share growth. Olin has been on my list for weeks. I don't know if you haven't bought it yet. You might look. Long base, breaking out and running. Great earnings per share growth. Still like that stock. Now, Lending Club and Upstart are both leaders. Lending Club has pulled back to the 17. Its earnings are already out. It's got great earnings per share growth coming in, priced at a big multiple. When do you go back into the energy patch? I don't know. I do have some Callan, and it's a cup, and then a cup and a cup and a handle. Does a breakout here. Look at the earnings per share growth. Look at the multiple. Eventually, the stock's got to reflect that, unless they do a huge cash dividend, which isn't so bad either. Um, DigitalOcean, I wish I had more of this. And here, it's not hard. Okay? You find it here. Why? Because you had a kahuna, you had a squeeze. You take a look at the chart, you just traded above the chandelier stock. You buy it at the open on the next day if it's above the closing price here. That's how I trade. This is a beautiful stock. I don't understand why it's so expensive. It got an upgrade on Friday, which certainly didn't hurt. Here's Riot Blockchain. I mentioned might be an easier stock to buy than Mara, similar place, similar earnings per share growth. The next one looked CDW, place I like to buy computers. It's squeezing. Had a kahuna, mobile break from a squeeze, positive convergence on the relative strength. This is one that I look to buy, but it's got to take out yesterday's high before I'd be interested in it. Anything else? That Holly Frontier, old name. Some points be good to buy refiners. Pull back and had a new buy signal come in off of a area where the moving averages are starting to come together. Great earnings per share growth, pays a 2% dividend. And I guess that's enough to mention. And you have all the pot stocks. This one looked interesting here. If it can get above the 200, this is Aurora Cannabis. So what I want to do is let's just go to the keepers. And this was our list of leaders. Remember, it's not a buy list. It's a list of stocks that we're going to watch because we'd expect the keepers to roll over and their index to roll over before the major markets collapse. Now, do I not? I know I have a keepers here. Here it is. Bring it over here. Let's do them in alphabetical order. Whoops. And many of these we've already looked at. AMD, still looking good. Ayer Test Systems, pulled back to the 17, sideways for a couple of days. My guess it goes higher again. Its earnings, I don't know if the earnings are out yet. Affirm, earnings are out. It had a nice bounce. This is just getting sloppy here. So it had a big move up on Thursday, then it sold off. On Friday, it opened down and sold up. It's bouncing around. This has been a leader, an IPO. It's got to settle out. Google continues to look good. Asana, probably one of the best stocks in the market right now from a stock performance without a U-turn or anything. This is an IPO that just took off. It continues to look great. A leader, that's why it's in our list. Team is another one that's been a leader for a long term, nothing to do. Avis Budget, I don't like the pullback it did. It's too crazy, the movement. If I bought it at $30, $40, I'd probably give it more rope. But, don't be a pig. As far as a leader goes, it came down after we put it on the index. Technically, it's still an uptrend, so I'm going to leave it where it's at. I can't remove things from the index. It just gives you a sense when you start having more that are ugly than good. Blackstone remains strong. Camden Property Trust hasn't budged. Cloudflare, new highs. Now it did pull back for a couple days, but it looks like it's ready to break to new highs. And on a closing basis, on a weekly, it is at new highs. Costco still looks good. Datadog, nothing wrong with Datadog. Here's Digital Ocean. I wish we all owned a lot of this stock. Encore Wire looks good. EPAM looks like it's starting to pull back and go sideways, but it's certainly not a broken stock. It's still at the 17-day. Again, let me say this. This was a list of stocks we chose together at the virtual stock club and then the following several days. I gave you this to put into your HGSI so you can track it with me. I'm not telling you to buy any of these. I'm saying that unless we start seeing that most of these break down and it takes the index with it, it's okay to still be long this market. Gartner, it ran up and petered out, but seems to be still be going up. And you could see from a closing basis, it's still in all-time high territory on the weekly. Generac, we already talked about, came down on earnings. Hertz continues to do strong. Horizon came down, going sideways. It's below the 50. If I owned it, I might not be loving it here unless it gets back above the 50 quickly. I don't currently own it. Then I look at this earnings per share growth and I go, whoa. Hut 8 is another minor like the others. Pullback, bounce off the 17, probably buyable here, just like Riot, Mara. InMode, medical device company, look at the weekly, sideways 3 weeks in a row, not far off the high, still would be considered a leader. Here's the index of the keepers. Now, don't you wish your portfolio looked like this? This thing is definitely not broken yet. Continuing, KKR, looks like the keepers index pulled back to the 17. Lattice, sideways but fine. Life Storage, pulled back to the 17. Motorola sales has flattened, but still set an all-time closing high this week on a positive week. Nasdaq continues to move up a small angle. We already looked at Netflix, looks good. Nvidia pausing, hopefully to refresh. Old Dominion closing at highs. Olin, I showed it to you earlier. Tesla sold off hard. This is probably the worst looking stock in the keepers. And it broke down below the 17. Is Tesla broken? No. Do I think Tesla is at risk of going lower? Yeah. And I'm surprised that this didn't pull over the index. Probably because it's so expensive, you don't have as many shares. Union Pacific ran up sideways. It's not really breaking out and going crazy, but it's still up near its all-time high and it's still appropriate for this index. Unity, this is one that, like Affirm, has been a leader, like Asana. I wish I owned this stock. I was afraid to buy it, and then look what it did this week. Holy shamolis. On earnings, this thing is amazing. Clearly one of the true leaders right now. And then Zscaler, we talked about it. So these are the stocks and the keepers. Except for Tesla, they don't look bad. Now, one thing, a view that I put together, I always wonder how far off highs I am. So I could look off of off of the 52-week high. Avis really had this crazy movement. Tesla's the other, and Affirm, and then there's Generac are the ones more than 10% off their highs. And you wouldn't expect to see a lot of stocks that far down, but then you have a bunch of stocks that are right up near their all-time highs. So the index is holding. I think it's a great thing to use. Ian taught this to us many years ago. So just on closing, let me remind you, it'll be below if you're watching YouTube in the email if you're clicking on a link. Next stock club is Tuesday at 7:30. We may have Dr. Wade. If not, you're going to have extra of me. And I plan on showing you how I find those stocks at the right buy points. So see you Tuesday. Good night, everybody. And thank you as always, for watching this.